who has quite a bit of a lot of opinions about this, of course, is Bill Fleckenstein. He's the founder and president of Fleckenstein Capital, joining us from Seattle, this time on the phone. And Bill, I'm sure listening in on our conversation, you've got a lot to say about this. But first off, what do you make of the rally that we saw yesterday?
Well, first off, I'd like to be sure we come back and talk about Bernanke. But as far as the rally yesterday, I think that it was obviously quite powerful, and I think it was caused by the fact that, or exacerbated by the fact that so many people have become so bearish and so many people are kind of worried about a crash.
Right.
They probably acted on that behavior, and maybe there were plenty of shorts, and I don't know what precipitated the rally yesterday, but it really fed on itself. And the tip-off that something might be coming was last Friday when Intel pre-announced right in front of Bernanke's speech, and the market and the market didn't tank and turned around and rallied. I think that told me that maybe the market wanted to go up for a little while.
All right, Bill. So it's John Erlichman. So where do you think the market is headed? Last time you were on, you talked about bank stocks. You're not a big believer in the quality of earnings, but we know that a lot of people will say you need the bank stocks to rally for the rest of the market to rally.
Well, I think that there's a chance that the market can rally for a little while. I don't really know. I'm sort of agnostic about what the market can do right now, and I'm not really investing predicated on the general level of the market. I think overall there are plenty of high-quality stocks that aren't expensive, particularly like large-cap tech stocks maybe. But where there is still rot and where there is still our problems, I believe, are the bank stocks. I think the bank stocks are dangerous because the accounting is still no good. We still have the residue from the real estate bubble that the Fed precipitated despite Bernanke's denial this morning, and thus there's a lot of unfinished business inside the banking system, especially with real estate-oriented assets. So if you said you absolutely had to be short something, I probably would look at the banks. The reason I won't short them is because the accounting is so bad, and that it's not possible to really get your arms around what's going on. I was going to say,
so you don't really know then where you would short, right?
And even back in the mania, I tended to avoid them most of the time because they were just financial black holes. I stated that many times before before the whole thing blew up, right? So I think I wouldn't own a financial stock with a gun at my head. But there are plenty of stocks in America that aren't particularly expensive. Now, I believe we're in a state where the market's in a huge trading range and we're undergoing multiple compression, and I don't know where that's going to sort out. Maybe PEs are going to end up at 8 instead of 12 or 14. I don't know. But I think in the very short run, maybe the stock market can lift a little bit.